Welcome to another S&P 500 analysis. Today is October 17, 2020. In this video, we will analyze the S&P 500, review the stock market sentiments and its internals to see how strong or how weak the market is. And we will look at the NASDAQ 100, the Dow Jones Industrial, the Dow Jones Transportation, and the Russell 2000 to see what the various market is telling us and what they might be doing in the coming week. The S&P 500 started the week with a huge gap on Monday that resulted in a gain of 1.6%, or approximately 57 points. Then for the rest of the week, it gave back all the Monday's gain and ended the week practically unchanged. So let's take a look at the S&P 500. Before we start, do me a favor and click the thumbs up to help me promote and share this video on YouTube. And don't forget to subscribe if you are new to this channel. Let's start with the S&P 500 monthly chart. So far, the S&P 500 is printing a bullish inside bar for the month of October and sitting near the top of this megaphone channel. Zooming in on the weekly chart, we see the S&P 500 tag the upper trend line of the megaphone channel. The S&P 500 printed a spinning top weekly candle that signifies some indecision from the market participant. The range for the week was approximately 109 points, and the S&P 500 gained almost 7 points, and it is still in one-time framing up. The 10-week moving average and also the 40-week moving average are still pointing up, and the weekly close is above the 10-week moving average, and the weekly trend remained to be up. Before we analyze the price action of the S&P 500 and other market indexes, let's go take a look at the stock market sentiments and the internals to get some context on the strength of the market. Starting with the volatility index, some call it the fear index, the VIX. We see it been hovering inside the zone between 20 and 30 level. It closed the week at a neutral level of 27.41. We also see the put-call ratio is in a relatively neutral level. It was mostly in the range of 0.55 to 0.6 throughout the week and closed the week at 0.59. So for the week, the sentiment did not show any increasing fear or greed from the market participants. Now let's take a look at the internal and see how strong the stock market is. Looking at the New York Stock Exchange up-down volume ratio, the most negative we saw for the week was on Tuesday, where it was minus 2.85, and the most positive was 1.67 on Thursday. These up-down volume ratio are telling us buying and selling are somewhat subdued, so there is no panic selling or FOMO buying. The New York Stock Exchange daily advance decline also showed lack of broad-based buying or selling last week. The highest number of answers leading the decliner was 737 on Monday, and the highest number of decliners leading the advancer was 1,102 on Tuesday. On the New York Stock Exchange new high, new low, we did see there were 174 more new high than new low on Monday, and 110 more new high than new low on Friday. Throughout the week, the new highs outnumber the new lows. The New York Stock Exchange cumulative advance decline line is showing a slight negative divergence on Friday. This tells us to be on alert for potential pullback to resolve this divergence in the near future. So beware of potential pullback next week. Moving on to the NASDAQ market, the up-down volume ratio was relatively low for the week. The daily advance decline was very similar to the New York Stock Exchange. Lack of broad-based buying and selling. Looking at the NASDAQ new high, new low, for the first time since the beginning of September, the new high outnumbered the new low by more than 200. It was 225 more new high than new low on Monday. The NASDAQ cumulative advance decline line showed no divergence. Just to recap what we saw from the sentiment and the internals, the fear and the greed sentiment level is still in neutral. The stock market internals are telling us there was no broad-based buying and selling and no panic selling last week. Now let's go analyze the S&P 500 price action and see what it did and what to expect for the coming week. On the screen is the daily chart of the S&P 500. Remember, one of the price action that we talked about in the prior video was to look for this pullback and come back in and fill these two gap here and possibly come down to the 34.28 area and find support. Then it bounces back and make it this way toward the all-time high. What the S&P 500 did last week was it gapped up on Monday and then pulled back on Tuesday and Wednesday and came back in to fill the Monday's gap. Then on Thursday, it opened down, and on its way back up, it filled this gap here near the 34.47. Then on Friday, it gapped up again and found seller when it got up to above the 3,500, and it closed just a tab above the Thursday close, and essentially put in a inverted hammer or a shooting star and close near the low of the day. So for the coming week, we will still continue to watch for a pullback to come in and fill this gap here near the 34.28 and see would it be able to find support and get a bounce back up and work its way back toward the all-time high near the 35.88. If it could not find support at the 34.28 level, then we will watch for a possibility of make its way down to fill the gap at the 33.06 area before it finds support and possibly bounce back up. So those are the scenarios that we will keep an eye on for the coming week. Now, there is a possibility that it could come all the way down to this 3,200 level. And if it breaks the 3,200 level, then we essentially will be looking for a trend reversal. But until then, we're pretty much still in a uptrend. Let's take a look at the SPY, the ETF for the S&P 500, and see what are some of the price levels to keep an eye on for the coming week for those that are trading the SPY. Here I have a 240-minute chart here, and I have a composite profile for the price range from the March low to the Friday's close. And let me zoom this in, and we could take a closer look at the price action and also some of the price zone to keep an eye on for the coming week. And here you see that we got this big push on Monday and then pulled back on Thursday. Then it got a reversal. Then on Friday, it kind of closed near the low. At the last half an hour of the trading session, we saw a little bit of a sell-off. It could be due to option expiration, so there could be some trickery there. But right now, we still have to pay attention to that little bit of a sell-off on Friday close to the Friday close. So here's what we're going to be keeping an eye on for the coming week is for it to come down here in this high volume area. What I did is I mark off the high volume zone with a shade of light blue. So if it could chop around here and find some support and then pushes back up, then we're basically looking for it to make its way back toward the all-time high around 358.75. Now, if it come down and could not hold support, instead it make its way down, then we basically looking for this zone down here, and fill this gap between the 331 and 329 before we look for a possible support bounce and make its way back up. So that's what we're going to be paying attention to on the SPY for the coming week. Now let's go and take a look at the other market indexes. Here on the NASDAQ 100, we see that the price action also came up on Monday and then pulled back, just like the S&P 500, and also got a little bit of a sell-off on Friday. So right now, we're essentially looking for it to continue to pull back to this 11,727 and see would it be able to fill this gap and find support and get a bounce back up. And if it could not find support down here at the 11,727, then we watch for the continuation of the pullback down to the 11,576 area and possibly fill in this gap here to see what we see some support and see a bounce back up. Then in the worst case scenario is for this thing to come all the way down to the 11,177 and fill this gap here before we start looking for a next potential support level to see would it be able to get a bounce off of that. For the Dow Jones Industrial, we see that it printed a little bit of a graveyard doji or inverted hammer here. So for the coming week, we see what the pullback and fill in this low gap, and then get a little bit of a bounce back up toward the this pivot high here, 29,199, and then make its way up toward the new all-time high up at 29,568. If it is continue to pull back, then we're essentially looking for this thing to possibly pull down to the 27,239 and fill this gap to see would it be able to find support down at that level. Otherwise, we essentially are looking for it to continue to move back down to the 26,525 area and fill in this particular gap way back in August. And the Dow Jones Transportation continued to hover at the new all-time high, although it did close down on Friday. So for the coming week, the support level that we basically looking for the transportation to find support near the 11,623 if it continue to pull back. So it's near this trend line here, this supporting trend line. If it breaks the trend line, then we're essentially looking for this 10,960 as the next potential support there. And finally, the Russell 2000 came back in and came down to this 1,610 level and found support right underneath it and got a nice bounce on Thursday. Remember, that was one of the support levels that we're basically watching for, on a potential pullback. So right now, we're going to see will it continue to push up toward the 1,698 and possibly, take out this pivot high here, then make its way up toward the all-time high near the 1,742. But if it decides to pull back, then we're essentially looking for the possibility of 1,572 for the next potential support level and see what it get a bounce here. So that's the price level that we'll be keeping an eye on for the Russell 2000 in the coming week. So in summary, even if we continue to see a pullback from the S&P 500 and the market next week, the price actions still indicate they are in an uptrend. Until we see the deterioration of the internal and the changing of the sentiment, we will continue to monitor for potential new all-time high, especially from the Dow Jones Industrial. Don't forget to smash that thumbs up icon for me and help me promote this video on YouTube. Thank you for watching and stay safe.